Hello ladies and gentlemen, it is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome to this video. And guys, as you saw from the title from this video, I will be talking about deciding what Forex pair to trade, okay? Now, as we know, or you may not know, there is so many different types or so many different kinds of pairs that you can trade. You can also trade indices as well. And you can also trade gold. Again, it all comes under the bracket of Forex. But one of the key things to understand, and especially this is something that I'm going to make very, very clear in this video, is to understand why would you trade a certain pair, okay? So what is the reasons for picking a certain pair? Why would you trade multiple pairs versus just one or two pairs or vice versa? Again, there's just a bunch of reasons to help you understand how to pick which Forex pair to trade, which will be best for you, okay? Now I'm going to start this video just by covering, just based on what I've had and what my experiences have been. If you are a price action trader and if you are trading a price action strategy, which is based on patterns in the market, then something that is very, very important to understand is that each and every Forex pair will have its own natural nature or its own intrinsic movement, okay? So for example, I know that the Aussie US dollar likes to move very, very correctively a lot of the time, okay? Versus a pair such as Euro Japanese Yen can exhibit very, very messy price action, very wicky price action in some periods, and in other periods it can be very, very nice in terms of present corrections where you can actually get good reversals from, okay? So this is something that is very, very important to understand is that when you're looking at different Forex pairs and you are trading a strategy that is based on patterns and just looking at the candlesticks in terms of their moves and you're drawing patterns over it, it's important to understand how does each of these pairs like to move, okay? Now, in terms of selecting one, I would highly recommend that you just pick one and then actually just go ahead and actually draw, the patterns that you're looking for out on them, okay? Because of course, like I said, that's the best way to do it. Now, another way to understand, and I think this is actually very, very important, is that understand that try not to go to the exotic pairs or the minor pairs so much. Try and stick to the pairs that are pegged to the US dollar at the very least, because this is going to be important when I come to talk about spreads and commissions in this video. But like I said, one of the best things to do is that if you said, okay, I want to just decide to trade a basic flag pattern in my trading strategy, then just go ahead and open up a Forex pair. Like I said, either ideally a major, a maximum up to a minor pair, then go out and actually just backtest it, draw the flag and see how often or how well it works. See how wicky pairs are, see if it does actually present the flag often. For example, I know even with a basic flag pattern, Euro US dollar does like to exhibit very, very nice flags time to time on certain time frames, okay? So like I said, it's important just to say, okay, well, if you're a price action trader, just open up any Forex pair that is a major or minor and go out and test, see if the flag pattern is there and if it does work most of the time, or what is the strike rate, what is the percentage, or what is the return. Again, all down to you and your back testing on that one, okay? So like I said, that's covering more on the price action side. Now, in terms of actually thinking, okay, well, you've got a strategy, or you may or may not have a strategy, and you're thinking, which one do I decide? Now, this is where we go into the topic of spreads and commissions, okay? Because each pair, like I just mentioned, that you have major pairs, you've got minor pairs, you've got exotic pairs. And these kind of the spreads, I'm sure you guys know what spread is. Basically, it's the difference between the buy and sell price at one moment in time. The spreads drastically largen as you go towards exotic pairs, okay? So the pair that has the tightest spread would be Euro US dollar, okay? So for example, it will have maybe 0.1 pips, 0.2 pips if you are trading on a raw ECN account, which again comes down to your broker. So check your brokers, try and have an account that has very, very thin spreads, again, where the buy and sell price is very close together, because that allows you to spend less when you're actually executing that button, okay? Because as soon as you hit buy or sell, you've already paid for that trade to actually come into fruition at that moment in time. And of course, that is basically the spread, okay? Now, as you go towards the exotic pairs, the spreads widen. Why? Because it is not as liquid. And I would highly recommend not going towards exotic pairs because they can be very volatile in nature. They can have slippage and all these other things. Again, you can look at the charts and check that out. But again, like I said, take into account spreads and commissions. Euro US dollar is very, very good because it is the one pair that is the most liquid in that scenario. And of course, it can actually help you when you are trading and prevent slippages, etc., okay? And that also depends on when you're holding the trade, because again, if you're holding it overnight or you're holding it over the weekend, you can exhibit possibly large slippage. But a pair like the Euro US dollar, again, like I said, the spreads and commissions are low. So do check the spreads and commissions on your pair that you have selected or you are going to select or deciding or thinking of selecting, okay? Now, once you've picked a pair and you said, for example, Euro US dollar is good, or I want to pick Aussie US dollar because they both have very low spreads, then it comes down to understanding how well the strategy performs, okay? Now, you may have a strategy, I'm just gonna pick one out of the sky, which is a moving average crossover, where you've got two moving averages. If one crosses the other, you hit buy, or vice versa, you hit sell. That is one basic strategy. Now, once you actually selected the pair, go and backtest it and see, does it perform well with the strategy? Now, if it doesn't, then don't worry, just select another pair. Again, there are many different major pairs. I'm not sure exactly how many, but I'm sure there is a decent amount. Just backtest the strategy along another pair and see how it performs, okay? So there's no right and wrong answer, but like I said, the key point of this is to understand that each and every pair will bring its own different spread, or size of spread, and the commissions that comes with it, okay? So do keep that in mind, especially when you are looking to open a brokerage or broker account, not brokerage, but you're looking to open a broker account, and then go on from there, okay? So far, like I said, intrinsic moves, okay, of a pair is important to understand if you have a price action strategy, the intrinsic nature of how each pair moves, and secondly, understanding the spreads and commissions of each and every Forex pair that you're looking for, okay? Now, the third thing that I'm going to mention in this is that when you're looking to trade Forex pairs, there is typically, or can be, and you might actually be thinking about this, there's a typical kind of habit to be like, okay, I want to trade many pairs because that means I've got more opportunities in the market for my strategy, okay? Now, there are some pros and cons to this, but it all depends on your strategy, okay? I'm not saying it's a right answer, I'm not saying it's a wrong answer, but one of the things I've come to understand is that typically, the fewer pairs that you trade, the better, okay? Because the fewer trades you have, or the fewer pairs that you have, the more you can concentrate your time on them, okay? It's easier to concentrate all your time on one pair than 5 pairs, okay? If you actually spend all your time mastering one pair and you're able to extract good percentage from that based on your strategy, or you're adapting your strategy to one pair, then not only is it good for psychology because you're actually saying, okay, well, I know this pair because I'm always backtesting this. I'm not backtesting any other pair. This is the one pair that I've decided. Then it's good for your psychology. Whereas if you're actually trading 5, 6 pairs, and believe me, I've done it in the past as well, trading multiple pairs and adding more just for the opportunity to actually be in more trades, then it can be detrimental to your strategy. For example, if you are trading a price action strategy and you are trading, so let's say, for example, 5 pairs, and you take one loss on each pair, and you're risking 1%, that means you're 5% down on the account, okay? Now, you can do that. Again, like I say, you can trade as many pairs as you like, but from what I've seen, a lot of traders, a lot of good quality traders, they do actually trade fewer pairs, okay? But again, strategy dependent, okay? So make sure that that is something you do consider. It's not necessarily to think that, and this is a common beginner habit, to say, well, hey, if I trade more pairs, I've got the biggest I've got the more opportunities so that I have more potential reward, right? Again, that is still coming on the side of greed. Again, strategy dependent, but I do believe it comes more on the side of greed versus trading fewer pairs. The more you understand few pairs, the better, okay? Now, there's just a quick point that I want to note out because this is something I've heard. It may or may not be true, but when it comes to indices, especially, for example, the US 30, from what I've heard at this moment in time, is that there is no commissions on it, okay? So guys, feel free to check that out. I'm not too sure if that's the absolute truth, but again, versus a Forex pair such as Euro, US dollar, Aussie, US dollar, etc., where you're paying a commission for each trade, there is no commission no commissions on the US 30, at least from what I know, or some other indices possibly. So go out and check that out and see if that's correct, okay? So like I said, guys, when it comes to deciding how many Forex pairs to trade or deciding which one to trade in particular, it is, number one, is strategy dependent. But if you don't have a strategy, understand that each pair comes with different size spreads depending on the broker and different size commissions, again, depending on the broker. So go and look at the brokerage websites, check them out, see what their typical spreads are, because again, that's very, very important, depending on strategy again. But like I said, when it comes to understanding which pair you want to trade, try to go against the habit, especially at the early stage, at the very least, to trade many pairs. It is by far a lot more simpler and easier and a lot more controlling, or a lot more easier on the psychology to actually just trade one pair, focus on one pair, fully understand it, then to actually trade multiple pairs, that where you're just literally flicking in between, just trying to find an opportunity. Because the issue with that, like I said, is that when drawdown hits, which drawdowns do happen time to time, then it can be very, very detrimental on your psychology, okay? So guys, like I said, I'm not gonna just be on this video saying, okay, guys, just trade euro, US dollar, for example, because it's the most liquid, the spreads are very, very tight. Go ahead and trade that one. Like I said, it depends on your strategy, okay? If it's a swing strategy, maybe you may not care so much about the spreads, possibly, who knows? Maybe you may not care about the number of pairs to trade, but like I say, I'm sure that if you are very early stage in this game, in Forex trading, you will actually be more happier to actually be a little bit more active on the charts and trading. Because again, I know that there's that kind of urge to be like, it's under the side of greed, is to be like, yes, I want to be in the market because I want to actually be there, market participant, extracting money from the markets, right? A little bit more consistently. But like I say, trading more pairs can be detrimental at the very early stage, rather than versus just trading one pair, really focusing on it, having a strategy that really works with it, and try and understand your psychological caveats or psychological hurdles, and seeing how to actually tackle those. Because in the long game, like I said, it definitely is a psychological game, okay? Now, I do know traders, and I'm sure you guys have seen, like there was a video online of some very, very profitable trader that traded a strategy that has a very low strike rate and a very high risk to reward. I think it was win rate was 20%. The risk to reward or average reward per trade was over 20, which is crazy. Again, this trader was a lot more advanced, right? So again, they have the psychological, they've got their psychology on lock, okay? So they can actually take 80% of their trades, letting them be losses or break evens, for example. But again, the 20% that win, it does have a very high risk to reward. But again, I wouldn't really recommend that. You want a strategy that at least has a good win rate, it has a good risk to reward ratio. Again, when it comes to the trading and deciding what Forex pair to trade, like I said, depending on spreads, commissions, dependent on strategy and early stage, try to actually, I definitely recommend trading a few pairs, because at the very least, you know, you can really focus in on price, you can focus in on your strategy rather than flicking through different pairs, just trying to satisfy that need of greed to be in every opportunity that different pairs may present themselves, okay? So there you have it, guys. I hope you did enjoy this video. Guys, if you ever fell in one of these habits, okay, so say for example, trading multiple pairs, trading more pairs, or trading a pair based on just because you heard that it's very cool. Like I know a lot of people that do like to trade gold because it's gold, right? It just sounds cool, right? That can actually be the reason. I know some people have become traded that pair because it's just cool to trade gold because it sounds like, oh, it sounds worthy, right? Let me know if you fell into any of these traps where you're just like, okay, well, I will trade this pair because maybe, I don't know, social media said it, or maybe this trader said it. Or you can tell me, oh, well, I decided to trade multiple pairs because I wanted to be in many opportunities. Guys, genuinely, feel free to let me know, okay? There's no bad thing about it. We are all on the journey. So again, you can actually just have made those mistakes. Guys, genuinely, feel free to let me know. I would definitely be keen to hear what your kind of hurdles were when it came to choosing which Forex pair to trade, okay? But if you guys do actually trade a certain Forex pair, one or two pairs in particular, guys, let me know the exact reason why. Is it down to spreads and commissions? Is it down to the way the price action is on that pair, or is it down to any other reason? Please definitely do let me know. I'm definitely more than happy to have my ears open and hear what is your thoughts on deciding what Forex pair to trade, okay? So guys, I hope you enjoyed this video. Don't forget to hit the like button and subscribe for more great trading content. But for now, I genuinely hope you have a fantastic trading week, and I'll speak to you guys soon. Take care and peace.